Welcome back to Boni's Life, your weekly deep dive into the cryptocurrency markets. I'm Boni, and today we're analyzing the past week's performance with special focus on the last 24 hours. We've got quite a story to tell today. Bitcoin just hit a new all-time high above $111,000. Yet the market's reaction has been surprisingly muted. We'll explore why this might be the most silent Bitcoin ATH we've ever seen, according to industry experts. Today's episode will cover the current state of the crypto market, including key indicators like market size, liquidations, and the Fear and Greed Index. A detailed analysis of major cryptocurrencies, including Bitcoin, Ethereum, Solana, Cardano, Swiss franc, Avex, Sonic, Grass, XRP, Hyper, Ton, and WorldCoin. Global events affecting the trading markets. Expert commentary from leading traders and institutions. And finally, our price predictions for the week ahead. So whether you're a seasoned trader or just getting started, stay with me for the next 20 minutes as we navigate the complex world of cryptocurrency together. Let's start with the big picture. The global cryptocurrency market currently stands at $3.52 trillion, showing a 4.59% decrease in the last 24 hours, but an impressive 31.52% growth year over year. Bitcoin continues to dominate the market with a 61.29% share, while stable coins collectively account for $248 billion, or about 7.05% of the total market. This high Bitcoin dominance suggests we're still in a phase where capital is concentrating in the market leader rather than flowing freely into altcoins. The Fear and Greed Index currently reads 70, placing us firmly in greed territory. For context, this is down from last week's reading of 75, but still indicates strong bullish sentiment. What's particularly interesting is the disconnect between this bullish indicator and actual market behavior. Despite Bitcoin reaching a new all-time high, we're seeing unusually low retail excitement. According to Matthew Siegel, head of digital assets research at Van Eck, Google search interest for Bitcoin stands at a relative value of just 30, compared to 75 during the late 2024 peak, when Bitcoin was actually lower at $108,268. Let's talk about trading volumes and liquidations. The 24-hour trading volume across all cryptocurrencies is approximately $154.14 billion, down 13.4% from yesterday. In terms of liquidations, we've seen $258 million worth of positions liquidated in the past 24 hours, with long positions accounting for 62% of that total. This suggests some traders were caught off guard by the recent price movements, particularly the sharp pullback after Bitcoin briefly touched $111,000. Open interest in Bitcoin futures currently stands at $24.8 billion, near all-time highs. This high level of open interest indicates strong trader engagement, but could also signal potential volatility ahead if we see a cascade of liquidations. Now, I know charts and numbers can get a bit dry, so let's put this in perspective. What we're seeing is a market that's technically bullish, but emotionally cautious. It's like attending a party where the music is great, the drinks are flowing, but everyone's standing around the edges of the room instead of dancing. The question is, what will it take to get this party really started? Let's dive into the individual cryptocurrencies, starting with the market leader. Currently trading at $108,644, Bitcoin has seen an 18.2% increase over the past 30 days. The technical indicators are predominantly bullish. with Bitcoin trading well above its 50-day moving average of $65,200. The RSI stands at 62, indicating momentum without entering overbought territory. What's fascinating about this rally is that it's primarily driven by institutional players rather than retail investors. CryptoQuant data shows US-based entities, including exchanges, banks, and funds, are playing a growing role in Bitcoin's ongoing rally. This institutional accumulation coincides with a technical golden cross formation, similar to patterns we saw before previous significant price gains. Quentin Francois, co-founder of WeRate, recently tweeted that this is the most silent Bitcoin ATH I've ever seen. This observation highlights a crucial market dynamic. Institutional money is driving prices while retail enthusiasm remains subdued. Ethereum is currently trading at $3,745, up 1.8% in the last 24 hours. The Bollinger Bands on the 4-hour chart are tightening, with the price hovering near the upper band, suggesting a potential breakout if volume sustains. Fundamentally, Ethereum continues to evolve with its upcoming Pectra upgrade, which will raise the maximum validator balance to 2048 ETH, enable fast withdrawal credentials, and target sub-5-second finality. Network researchers at Van Eck argue these changes could lift daily active addresses by 30% and justify an $800 billion valuation. Ethereum's Layer 2 ecosystem now comprises 62 networks, collectively securing about $45 billion of values and processing more than 70 transactions per second. Meanwhile, EigenLayer's risk-taking market has surpassed $15 billion in TVL, allowing ETH holders to pledge already staked coins to secure external services. Solana is currently trading at $172.50, up 3.5%, with a 20% spike in trading volume to $3.1 billion. Sol continues to benefit from its high-performance capabilities, occasionally overtaking Ethereum in daily transactions and DEX volumes. The upcoming Fire Dancer upgrade, targeting 100,000 transactions per second in the second half of 2025, could potentially challenge Ethereum's position as the default smart contract platform if successfully implemented. XRP is trading at $2.38, with analysts like Jake Gagain predicting a potential surge to $7.50 by the end of 2025, which would mark a new all-time high. Market expert E. Graggs identifies a possible breakout from two intersecting triangles and above what they call the genuine wake-up line. ADA is currently at current price, showing percentage movement over the past week. The Cardano ecosystem continues to develop with recent development, though price action has been relatively characterized movement compared to other major altcoins. Trading at $3.88 with a market cap of $13 billion, SUI has shown impressive momentum. Jake Gagain predicts SUI could reach $8.10 by the end of the year, representing a 108% increase from current levels. These emerging assets have shown varied performance, with AVEX at price, Sonic at price, and Grass at $2.29, down 8.7%, but up significantly over the past month. Hyper is trading at 0.1617, Ton at 3.02, and WorldCoin at 1.46, up an impressive 14.7% in the last 24 hours, with a 24-hour trading volume of $1.41 billion. Now let's examine how global events have shaped the crypto market over the past week. One of the most significant developments has been the regulatory front. According to the Bits of Blocks weekly wrap from May 23rd, Several major jurisdictions have introduced new compliance guidelines with enforcement actions against illicit exchanges. These stricter KYC and AML requirements could affect the liquidity and operational strategies of centralized exchanges. In the United States, Texas passed Senate Bill 21 on May 21st, moving toward establishing a strategic Bitcoin reserve. This represents another step in the growing institutional and governmental interest in Bitcoin as a reserve asset. The correlation between crypto and traditional markets remains strong, with Bitcoin showing a 0.78 correlation coefficient with the S&P 500 over the past 30 days. On May 23rd, S&P 500 index futures showed a modest uptick of 0.5%, while tech stocks like Nvidia gained 3.2%. This positive sentiment in equities appears to be spilling over into crypto markets. Interestingly, US banks have reportedly discussed a joint stablecoin initiative, boosting regulatory optimism in the crypto space. This development could potentially legitimize stablecoins further and integrate them more deeply into the traditional financial system. On the macroeconomic front, US 10-year Treasury yields have been volatile, ranging from 3.9% to 4.6% in April alone, driven by inflation fears and political rhetoric. Historically, a 1 percentage point drop in the 10-year yield has coincided with a 60-day 35% rally in Ethereum, while an equal rise has typically resulted in a 28% price decline. These global events highlight the increasing integration of cryptocurrency into the broader financial ecosystem. The days when crypto operated in isolation from traditional markets are clearly behind us. Today's crypto trader needs to keep an eye on everything from central bank policies to tech sector earnings to make informed decisions. Let's turn now to what the experts are saying about where the market is headed. Finder's QR1 panel of 50 crypto specialists pegs Ethereum at $5,770 by December 2025, while Standard Chartered has an even more bullish outlook, seeing ETH at $8,000 by 2026. Most sell-side houses cluster around $4,000 to $4,500 for Ethereum by the end of 2025, representing a potential 150% gain from current levels. For Bitcoin, Jake Gagain predicts a price of $175,000 by the end of 2025, while more extreme forecasts from analysts like BitBoy suggest Bitcoin could potentially hit $250,000. What's particularly interesting is the divergence in expert opinions about market dynamics. While price predictions remain largely bullish, there's disagreement about the path we'll take to get there. Bernstein analysts highlight the potential of restaking-powered, actively validated services, projecting they could add $20 billion in annual fees for Ethereum by 2026. Meanwhile, Van Eck researchers are focusing on Ethereum's upcoming Pectra upgrade as a potential catalyst for increased network activity. It seems the only thing experts can agree on is that they can't agree on everything. But that's what makes markets interesting, isn't it? One consistent theme emerging from institutional research is the growing importance of on-chain metrics. CryptoQuant data shows increased whale transfers ahead of Bitcoin Pizza Day, while Ethereum has seen a 12% increase in wallet activity over the past week. These on-chain indicators often provide early signals of market movements before they are reflected in price. Now, for the part many of you have been waiting for, our price predictions for the week ahead. Before I share these forecasts, remember that cryptocurrency markets are highly volatile and unpredictable. These predictions are based on technical analysis, fundamental factors, and expert opinions, but they should not be taken as financial advice. For Bitcoin, the technical setup suggests continued strength with potential resistance at $112,000 and $120,000. If BTC can maintain support above $102,000, we could see a push toward $115,000 in the coming week. However, the muted retail interest remains a concern. For a sustainable rally, we typically need broader market participation. Ethereum appears poised for a potential breakout, with $4,000 as the key psychological resistance level. The tightening Bollinger Bands suggest increased volatility ahead, and with the positive developments in the Layer 2 ecosystem, ETH could test $3,900 to $4,000 in the next week. For Solana, the increased trading volume and technical momentum suggest a potential move toward $190 to $200, especially if the correlation with tech stocks remains strong. XRP faces resistance at $2.50, but increased institutional interest could push it toward $2.75 if the broader market remains bullish. For the smaller altcoins like Sui, Avex, Sonic, Grass, Hyper, Ton, and WorldCoin, we expect continued volatility with potential outperformance from SUI and WorldCoin based on recent momentum and trading volumes. Looking at the broader market, the current greed reading on the Fear and Greed Index suggests caution. Historically extended periods in the greed zone often precede market corrections. However, the strong institutional involvement and relatively muted retail participation suggest this cycle might play out differently than previous ones. The key metrics to watch in the coming week will be Bitcoin's trading volume, institutional flows into crypto ETFs, and any significant shifts in on-chain activity. These indicators will provide early signals of whether the current rally has staying power or if we're due for a pullback. As we wrap up today's analysis, let's recap the key takeaways. 1. The crypto market stands at $3.52 trillion, with Bitcoin dominating at 61.29%. 2. We're seeing a unique market dynamic where institutional money is driving prices while retail enthusiasm remains subdued. 3. Global events, particularly regulatory developments and macroeconomic factors, continue to influence crypto markets significantly. 4. Expert opinions remain largely bullish for the medium to long term, with Ethereum expected to reach $4,000 to $5,770 by the end of 2025, and Bitcoin potentially hitting $175,000. What fascinates me most about the current market is this disconnect between price action and public sentiment. We're witnessing what Quentin Francois called the most silent Bitcoin ATH ever seen. This suggests we may still be early in this cycle, with significant retail participation yet to come. If you found this analysis helpful, please hit that like button and subscribe to Boni's Life for weekly crypto market insights. Drop your questions and thoughts in the comments below. I'd love to hear your perspective on where you think the market is headed. Until next week, this is Boni, reminding you to trade wisely and never invest more than you can afford to lose. See you in the next episode.